Daily Dose, the podcast where we talk about anything and everything, especially the most juiciest and uncomfortable topics. So today we have Khadija.
Hey y'all.
Reppin'
Money Honey Financial.
So, as you know, we're going to be talking about all things
money.
All things money.
Let's talk money, honey.
Let's talk money. I was going to make that the title too.
Everybody do.
That's your like slogan?
No, it's what I use for my Instagram live series. But literally anytime anybody invites me to speak, I need to trademark that.
Yeah, you really do, because it's very catchy.
So
do you have to pay to trademark stuff? But still, it's worth it, because anytime somebody use it,
that's me.
Okay, so how did you get into like financials and money and all that?
Yeah, so really good question. For me, I would say that it started based off of how I was brought up. My parents didn't talk a lot about money. If they did, it wasn't like a super positive thing. Watched them struggle from time to time, and I knew that that's something that I didn't want for myself. So because of that, I always was very disciplined with my money. If I didn't have to spend my money, I wasn't spending it.
Me too.
If I could spend theirs, I'm spending theirs. You know? So like me. It was always important for me to save money because of that. I had people that I looked up to, so like my godmom. I remember one time I was at the mall, and she just picked up a pair of jeans and like went up. I'm like, damn, she ain't
look at the price tag. Oh, it's
right. I'm like, oh, okay, like I need that for myself. So like, you know what? Let me be thoughtful about my money. But it wasn't until college when I remember vividly being in one of my professor's office hours, and I was asking him all these questions about like credit cards and buying stock, and he spent an hour just talking to me, answering my questions. Nice. And I'm like, damn, like how many people have these same questions but they don't have a professor they can go to? So you know what, let me start something where I could be that go-to person, or I could be able to provide that information. So that's kind of how it started.
So were you in school for finance? Yeah,
so I studied finance and accounting.
Even before that?
So I decided to study finance because, so background about me, I'm a first generation college student. So a lot of things I had to figure out on my own. So when it came to choosing a major, the only thing I know about myself is that I wanted to be the CEO of something. At the time it was Chick-fil-A. But when you Google CEO, like everything comes up strategy, finance. I'm like, okay, I must gotta get a finance major because a finance degree, because finance people think strategic. Like that was a lot of the correlations I was seeing. So I was like, you know what? I'm gonna go be a finance major because I want to be the CEO of Chick-fil-A. So then when I got to college, there was this guy who was a dean of diversity in the business school, and he pulled me aside and he was like, hey, like we have this 5-year Masters of Accounting program. I really like to see it more diverse. Would you be interested? And I was like, I don't know how I'm paying for 4 years of college. You can't get me there for a 5th year. And he was like, well, just think about it. So at the time I was interning at Comcast, and I had some mentors there, and I shared with them about the opportunity, and they was like, you gonna take that, right? And I was like, I don't know, am I? And it was like, I mean, 1 extra year just to get your master's, that sounds like a good plan. And I was like, okay, sign me up. So that's how the accounting added on.
So a lot of people was asking, what's the best advice you can give, or some good advice you can give about saving? When you get paid, how much should I save?
Yeah, so I can't give you a number, right? Because if you get paid, I can't give you a percentage because it depends. It depends on so many things, right? I live in New York. You live here. We could have the same paycheck, but if I tell you, you could probably save 50% of your check because the cost of living is a lot different in New York. So a percentage is really hard to tell. But my best piece of advice about saving will probably be to start doing it, and don't be afraid to start small. So I think a lot of people, they feel like, damn, I only got $10 extra. I can't save that. Yes, you can, because $10 turned into 20 turned into 40. Right? Like people subscribe to social media culture, and they see articles and headlines, and they say this person paid off $100,000 worth of debt on a teacher's salary, and they feel like if they can't make those big moves, they don't do anything at all. So I can't give you a percentage on how much you can save, but I can help you get to that number. What you should start with: how much am I bringing in? How much has to go out? Look at those things, and then determine a comfortable amount for you to be able to save. And in the beginning, that might be $20 a paycheck. It might be $200 a paycheck. But you have to start off with a number that's going to be realistic and attainable for you. If you start off saying, I'm going to save $500 a paycheck, and that's not realistic for you, you're not going to do it. And instead of doing $200, you're not gonna do it at all. You're like, damn, I can't save that $500. I'm just not.
I'm not gonna save. Don't put nothing to the side.
You're just not gonna put nothing to the side. So I would say, one, you need to make saving a habit. Right. So every time you get something in, put something away. Yeah. And that number doesn't have to be the same each time. Right. It doesn't have to be the same amount. It doesn't have to be the same percentage. But once you build that habit to know, all right, I just got a refund check, let me put something aside. Right. I just got a paycheck, let me put something aside. Right. You'll be conditioned to do that always put something away.
Okay. So it's tax. Tax is a huge thing, right? Is tax actually worth more than money? No, excuse me, not tax. I meant credit. Yeah, credit. Is credit actually worth more than money?
It depends on who you're talking to, right? And it depends on what you're trying to do and what your goals are. Yeah, because
people always say that.
A lot of this is like very like person dependent. Your credit score is very, very, very important.
What's a good credit score?
I would say anything you should really like good. Yeah. Good. It's like 700 and above.
Okay.
But you can make some things happen in the 600s.
People be saying 650.
650, you can make some things happen, but like you try and be like, oh, I'm the shit. Yeah. You 750 and above. Can't nobody tell you anything.
From 50.
I would say 750 and above. Ain't nobody messing with you. But people will say that your credit is more important, and some people will say that it's better than cash because when you have good credit, you can use other people's money to buy assets and generate income. But if you don't have a good credit score, but all you have is cash, you can still make some of the same deals, but you just got to use all your money to do it. So if I see a house or a property that's going to generate me, let's say $100,000 in income, if I got good credit, I don't have to spend my money to get that. Okay. But if you don't have good credit, but you have cash, you can still do the same investment. You just got to put out a lot more money in order to be able to do it. The goal is to use other people's money to make money, and that's what credit is going to allow you to do. But like, so if I had to choose one over the other, I'm gonna choose both. Right? Like, I want good credit and money.
People always say no credit.
Credit is important, but like it don't matter if you don't have no money. Yeah. Like you still have to have something. Okay. So you should be working towards. Yeah, because you shouldn't be like, I got $800. I got an 800 credit score. Okay. But you don't have no money. Like you still broke. Yeah. Like you still can't, because you still have to have money to put something down on anything. Even if you're using other people's money, they don't just give it to you flat out. Right. The amount that you need to put out might be less, but you still got to put out something. Right. So I would say work towards having both. Yeah.
Okay. So taxes, you do taxes or whatever. Wait, what are some services that you offer?
Yeah. So my primary services are tax preparation, bookkeeping, and business formation. Okay. So tax preparation, individuals who need their taxes done, business that need their taxes done, bookkeeping for small businesses. So small businesses to help them understand their numbers, their financials on a month-to-month basis. Then business formation. So if you need an LLC formed in any state, I'll be able to help with that as well.
Oh, in any state? Yeah. Okay, 50 states. Yeah. Is it really 51?
No.
Here we say Hawaii is like the 51st state.
It's the 50th.
I know.
Listen, geography not my thing, and I don't speak on what I don't know about. So
you just gonna say what I? Okay.
It don't matter.
Okay.
It don't matter how many states. Why?
Yeah, you're right. So when you do taxes, is there anything like we can do to get more taxes, or you know how people say I'm gonna write it off?
More of a refund.
Yeah, more of a refund.
So there's a ton of things, right? Number one would be to be a business owner. Okay. The tax code was really designed to be in favor of business owners and investors. Okay. So the typical person that is working a 9 to 5, there are not that many opportunities for you to get a tax break. Okay. But a person that's working a 9 to 5, they have a side hustle. Things change. Things open up. You can write off a lot more things. Okay. I have a side hustle, so now I'm writing off my cell phone bill. I'm writing off my Wi-Fi. You writing off your parents, I'm sure they don't charge you rent, but a portion of this space, right? You bought this. You can write this off. All of the equipment that you purchased, you can write off. So once you become a business owner, there's so many things. You can write off vacations, right? Oh, wow. If I'm going to, like I'm here right now, once I leave here, I'm going to go have dinner with a friend who's also a client. That's a client meeting. That's business. We're going to talk business.
I saw you post that on Instagram. I was like,
so like, I would say the way that you save the most on taxes is, one, start a business or have some sort of side hustle, because that's really where you'll be able to find the most tax deductions. Okay. And two, find you a good accountant, right? Like if you don't have anybody that knows this stuff, then you're not gonna realize. Like, I bought an iPhone 2 weeks ago. That's a tax deduction for me. It's for my business. Yeah, I just treated all my clients to Starbucks today. That's a tax deduction for me, right? Like, so
Starbucks is expensive.
Starbucks is expensive. So you can write it off. Some people will say get Uncle Sam to pay for it. I don't really agree with that line, because like, you still got to spend the money. It's just not taxed. So yeah, I would say really like starting a business and finding somebody to help you set things up from the beginning. Because a lot of people will come to me and they'll be like, how much do I need to be making before I can hire you? And I'm like, you probably should talk to me before you start generating money, because I probably can save you a lot more money just by helping you structure your business appropriately from a tax perspective. Like, people will, so for example, you start a business and you have an LLC. Right. And what people don't realize is that when you have a 9-to-5 job, you are taxed employment tax. Right. So you pay half of it, and your employer pays the other half.
Oh, for real?
But that's different than income tax. So it's income tax and it's employment tax.
Oh, okay.
When you are self-employed, you are both the employer and the employee. So you pay all of it. But there are strategies that you can do to save you money on that. But if you don't come to me until after you've already made $100,000, sometimes it's too late. So we can't implement that strategy for another tax year. Right. So I would say those two things. One, really like having a business or some type of side hustle that's going to help minimize your tax burden. Right. And two, finding you a tax professional who can help you think through these things to make sure that like you're recording things properly. Right. Because if you writing off, you spending it, but you're not keeping track of it, then it don't matter. Because how can you prove that you actually spent it? So really finding somebody to help you with it.
So is that like saving receipts?
Saving receipts, using software like QuickBooks. Okay. Some people, like I have some clients that are old school and they just use Excel, but that works for them. It's not my preference, but it works for them. Just having a record of everything that you but receipts is extremely important, especially if you're not doing things on a credit card. I would say like, when you have a business, you shouldn't even be using your personal card for anything that's business related. You should have a business bank account, number one. Like, even before you make a dime. Even if you just invest in your own personal money, I'll put it into the business bank account and then spend it all there, because that's going to really help you keep track of all the things that you're spending that's explicitly to the business.
And should you have an LLC before you even get into your business?
I would. I would from a legal perspective, but from a tax perspective, it doesn't really matter unless you have a type of business that will benefit from being taxed as an S corporation. Okay. So if you have a business, let's say you're like renting out Airbnb. Right. From a legal perspective, you might want to have an LLC, because if somebody sues you, you don't want them to be able to sue you for everything that you have.
It just comes out of your business account, right?
Yeah, you only want them to be able to sue the business for everything that they have. But from a tax perspective, it won't be too different of a thing. So LLC is really a business. I mean, a legal thing that you should be thoughtful of.
So if somebody sues you, your business, you have an LLC, and you only have $100 in your account, that's all they getting?
Well, it's not what's in your account. It's like the assets of the business. So say you only have $100 in your account, but your LLC owns a property. Then that's part of the assets. But I'm not a lawyer, so I can't really tell you get into the but it's the LLC is limited liability. So what they can't do is say, okay, well, I want to sue Jordan, so let me take her for her car, let me take her for her house, let me take her personal house, let me take her for, she got Chanel bags, let me make her sell those, she got all these assets. They can't touch any of your stuff. They can only touch what the business owns. And the business may own a car. Some people buy cars in their business's name, people buy houses in their busin's name, but it separates the two. Okay, so the Travis Scott incident. So you know how people... I'm not really that hip. You gotta let me know what happened with that. I do know. Well, his concert.
A lot of people are suing him. So they're suing the...
are they suing his business or are they suing him?
What was the concert called?
Something World? Astro World.
Astro World. So are they suing Astro World LLC? So they won't be suing like Travis Scott.
I don't know.
Okay. Because they saying they suing Astro World. So like I'm guessing like that they can't touch his personal.
So I'm going to assume that they are suing the business.
Yeah,
but
it's personal liability.
But I don't know much about law, right?
Yeah.
Like, so I don't know if he. Yeah, I don't know much about law, so I can't really answer that. Like, I would assume, but I also would assume that his business probably has most of the assets.
Yeah.
So it's probably still a lot of money that the business owns.
Yeah.
Especially the way a lot of people are structuring a lot of the things right now. So the money that he has personally might be good, but like I'm not 100% sure on that.
So would you? Okay, so if you have your business, so do you put most things under your business? Because like you said, like would you buy a house under your business? Because what if somebody sues you? Would they be able to take that house that you bought?
A rental property I would buy under my business.
But not your home.
But not my home. Me personally, not my home.
Because somebody would be able to that's the assets.
Part of the business. Yeah.
Dang. Okay.
Yeah. But you have people who have like multiple LLCs, right?
Yeah.
Some people will have an LLC for every property.
Oh.
Like an LLC not hard to find. If I had a bunch of rental properties, I would do an LLC for each rental property.
Oh, okay. You want to put all your eggs in one basket. Okay. So what are some good like credit card? I remember you used to post one a lot, but I forgot which one it was. And is that still like a reliable credit card company?
So the first credit card that I had was Discover.
Yeah.
Loved it. So Discover has a student credit card. So they their audience is for students, which means that the limit will be a little lower.
Okay.
And also the limit is usually lower, and it typically becomes easier to obtain because they're focused on students. I really like them because I like the rewards that they offer from using the card, and I thought like the mobile app was like very user friendly. I was never too concerned about the interest rate because I pay my credit card off in full every month, so I never was charged interest. So I would say Discover is a really good credit card to start out, and it's free.
Oh, okay, that's cool.
So the credit card, I still have that card. I added my sister to it as an authorized user, so that is now on her credit report as well.
Oh, nice.
So all of the history from that card.
So every time you pay, can you get in the points?
No, not the points. So
I'm like, her credit score going up.
So her credit score is going up.
What?
Yeah.
Let me go inside.
So you don't want to get parents.
I am. My mom.
Yeah, make me want to authorize user. But so like when they look at your credit score, they look at a bunch of things. One of them is how long you had credit. So since I had that card for years, it appears that she's had credit for years. Yeah. As long as that card is open and she's on it, so that adds to her credit score positively. And as long as I pay the bill, so payment history is important. So as long as I'm paying the bill on time, I'm positively impacting her credit score. But should I be irresponsible and not pay the bill on time, then she'll be negatively impacted. So it's important that if you're going to tie yourself to somebody like that, you should make sure that it's not going to negatively impact you, and that it's only positive. Only positive. So Discover is a good one. I no longer use my Discover credit card, but I still have it. I use my Chase credit card for everything. So I wanted a credit card that was going to give me travel benefits, so rewards to help me travel for cheaper. And I rack up so many points on this card. Yeah, this card isn't free, but it's also not expensive. It's $95 a year. But the rewards are like impeccable. Most credit cards have this one that I love, and it's when you rent a car and they ask you for if you want to buy insurance. You can say no because if you buy it on your credit card, typically your credit card has auto collision for rentals. So that one has it. I also currently have like 15. Actually, it made it went up. Like I think I may have like $1,800 in points on my in travel points. So like any flights I book, hotels I book, trains I book, cruises, I could use I have $1,800 worth, and I had to do absolutely nothing for that but spend on my credit card.
Oh snap.
So I like Chase for that. They have a lot of good perks, a lot of ways for you to be able to earn those rewards. and it's very easy to redeem them.
Is it good to have multiple, like you're saying?
I think that it's fine to have multiple, but I would spread them out over time. I wouldn't just go out and just apply for credit card, because that's alarming too. Why does girl need all this credit, right? Like, they like, hold up now. Why she have so many credit inquiries? Because every time you apply for the credit card, they pull your credit score.
Does your credit score go down every time they check it? Every
time they check it.
Because like they be saying on the radio, when you go buy a card, and like we won't check your credit score, your credit score, because it'll go down. That's true.
Yep. Every time they check it get impacted.
Oh my gosh, it's such a
it's like it's a game. Yeah. It's a game. Crazy. So yeah, I would say Discover is a good one to start out with. If you don't get approved for a credit card, a lot of times they'll offer you a secured credit card, and what that means is that you have to put the money up. So with the regular credit card, you spend the money and then you pay it off. With the secured credit card, pretty much they're like, we're going to secure it with your cash. So you give us $300 and that's your limit, and then you can spend it and pay it off. And then eventually, after you've done well for a couple of years, we'll graduate you to the unsecured. We'll give you your money back, and then you can graduate to the unsecured credit card. So that's an option if your credit is not quite there yet, and it'll help you build your credit.
So some people say, can you use your credit cards to pay your other credit card bill?
I don't think so. I don't think, because like I can't even pay my student loan debt with a credit card. Like I don't think that you can go into debt. I don't think you can go into debt to pay off debt. Okay. I don't think that's, because some people say they use a credit card to pay off your other credit cards. Maybe they do. Maybe they are like. So maybe you can actually, but. So sometimes you can get a new credit card. So sometimes, say you get a new credit card, you can do a balance transfer. Yeah. So you can transfer the balance from one credit card onto another credit card, and it will now be a part of the new credit card. So I think sounds difficult though. It sounds difficult, but sometimes it's worth it, especially if, like, say you get a new credit card and they say 0% APY for a full year. So if I can transfer my balance on something that has a 17% interest rate to something that has a 0% interest rate, then I'm not being charged interest for that full year, and I can pay down on it. So some people will do that, but I don't think that they physically are taking their credit card and paying and making a monthly payment. I think they're transferring the balance onto another one. Yeah. So I think you can do that, and in some cases it's necessary. And helpful and rewarding. Luckily, I haven't been in that spot yet where I've needed to do anything. I don't have any credit card. I use a credit card for everything, but I don't have any credit card debt. So, so credit card. Can you explain? Because some people don't really have credit cards and know how to use it. So, could you just explain, like, so you just put your money, but that's a secure when you put your money on it and use it. But can you explain, like, a real? Yeah, so like a normal credit card, or what they'll call an unsecured credit card, is you apply through a bank. So Discover is a bank, Chase is a bank, Bank of America has credit card. Like every bank will have a credit card, or credit unions as well, and they'll give you a limit. And for my Discover, I want to say the limit was probably, maybe it started off, let's say $1,800. Okay. A month. And then total. So they give you $1,800 that you can spend. Period. Wait, that's it? All right. And now I think that card may be like $6,000 that you can spend. Period. And my Chase one, I got once I had a job and started working, so that limit is like $18,000. Okay. So I have $18,000 that I can spend. Okay. So you have this credit card, you have this limit. So, but what you shouldn't do is reach the limit. You should keep it at 30%. 30% is that number before it starts to negatively impact your credit score. Because also, like, your credit report is saying, why she need to use all this credit? Like, why she don't have any of her own money? Right? You don't want them to look at you like that. So that's how it negatively impacts it. Okay. So you should use about 30% of it. And then for me, I spend whatever it is that I want to buy when I go out to eat. When I go out to eat with my friends, I put it all on my credit card and have them Venmo me so that I can get the points. Oh yeah, that's smart. And like every single thing, I don't even carry a debit card. I don't even know my debit because they're not safe. Like if there's fraud on a debit card or in your bank account, they have to investigate before they give you your money back.
Yes, they do.
So it's like, how am I eat? Like, I need food. Like, how do I get around? With a credit card, you call and say this fraud. They're going to credit it back to you. They'll investigate, and then if they say actually it's not fraud, then they'll take it from you or from there. So it's so much safer. So I spend on my credit card, and I pay it off in full at the amount. So whatever I spent, I pay. I use my bank account to pay it off in full at the end of the month, and then that way I don't accrue any interest. So that's been working really well for me. It helps me keep track of how much I'm spending.
Oh, that's smart.
Because I know exactly how much I spent that month, because whatever my bill is at the end of the month, that's how much I spent. So I know if I'm staying within my budget. And like I said, it's safer. Like, I don't have you will never find my debit card in Fashion Nova. You know how to save your card? No. I'll save my credit card anywhere because I know it's safe. If something's fraud, I can just call my credit card company and they'll investigate for it. For me. So that's why I use credit cards, and that's how I use credit cards. So like, my number one tip: if you don't have the money in your bank account for it, act like you don't have it on your credit card. Like, that $18,000 limit does not mean I can go out and spend $18,000. That means I have access to $18,000, but that don't mean that it's mine to spend. It's just somebody decided that they wanted to give me $18,000.
That's nice. So earlier, when you said that credit somebody else pays for, is that the $18,000, like the credit that you get?
I was thinking more of like a house, like for a loan, like using other people's money for like a loan. So me using someone else's money to buy a house versus me having to buy the house myself in cash.
Right. Okay. And do you have any tips for college students going into college, money wise, like?
Going into college
or in college, after college? I know on Instagram your journey of saving and stuff. No, pretty good.
Thank you. I would say in college,
no job.
No job.
No job.
In college, no job. Then there is no money, right?
It's no money.
So be thoughtful about your refund check, because some people don't work because they get a big refund check.
From what if you're not working?
Not a tax refund check from school,
loans,
from like your student loans, or if you
that's what people
overage on scholarships. Like, be thoughtful about that money. One thing that I would say for college students is, where you can not take out a loan, try not to. Grants. If it means getting a job, if it means begging your mom, if it means moving off campus so that you're not paying expensive student housing and you get a cheaper apartment, do it. Like, my life is so different than my friends who don't have student loans.
For real?
So different. Like, student loan, before my student loans kicked in, I was at brunch twice a weekend, every weekend. That first payment came, my first student loan payment was $1,187.
The first one?
The first one.
Dang, ain't even
$1,187. I was like, I can't hang with y'all no more. What you do? Could you pay it? Did you have the money to pay it? Thank God. But like, what if I didn't? What if I didn't have a job after school, right? Like,
that's crazy.
So I was able to pay it, but then I refinanced so that it could be cheaper. And I'm getting pretty close to paying it off in full now. But I would say, like, while you're in college, try and be thoughtful and strategic. And I know that, like, you want to be focused on school, you want to be focused on your experience, but where you can, try to not have to, because for me it was like, I need X amount, I'm going to take out X amount. I wasn't even thinking
that's how you
about,
were.
I wasn't even thinking about, like, Mom, I mean, I did certain things, like I became an RA, so that stuff could be cheaper, but I wish that I was a little bit more thoughtful about it. So I would say that, I know that's not saving, but that's going to save you so much money in the long run. Now, I mean, if you in a situation and you don't have loans and you don't have a job, my tip for you would be work really hard to get money, like to get a job once you leave college. That's going to be super important, and that's going to change the trajectory of your life. Because like I mentioned, I have friends that 401k has $100,000 in it right now.
From when they start working
for 5 years.
From out of school 5 years.
But that's because they can save that. So when you're paying $1,000 a month in student loans, you're not not putting you're not putting $1,000 away. I think my 401k might get $200 a month. Yeah. Right. So so if where you can try and limit those loans, right, I would really be thoughtful and strategic about it. And I know that's not realistic for everybody, but where you can be thoughtful of it, just make sure that you're thinking about it. Where you can start to pay them off before the interest hits, try that as well. Because when my interest hit, it was like...
Oh, it doesn't hit immediately?
It doesn't hit immediately. I don't think it hits until like 6 months after, depending on the type of loan that you have. Some loans are subsidized or unsubsidized. The subsidized ones mean that they don't accrue interest over time. Okay. Like my parents took out a Parent Plus loan for me. My first year of college, I did 5 years of school. I was in a 5-year program. They deferred it. They deferred it until I graduated. They said, we're just going to keep deferring it. And once you graduate, you can take care of it. It accrued $10,000 in interest. What? Just in interest. So on top of the loan, it's an extra $10,000 right there. What? Had we as a family been more thoughtful about that, I know my parents probably could have found $200 a month to help pay off that loan. Right? Or not even pay it off, just keep it into not accruing $10,000. That's another loan. It's some people that only got to take out $10,000 for school, you know? That's just my interest on that one loan. Not to mention all the other loans I had to take out sophomore year, junior year, senior year, super senior year.
That's me. Right now.
So it gets expensive. So like where you can start paying down stuff early, if you get an internship, put some money away for that. It's not always easy, right? Like you broke in college all semester, then when you get a job during the summer, like you want to spend your money having fun. I get that. But I would just say, just be thoughtful about it. I didn't know how much money I had accrued until it was time to start paying it. It was like I was like, damn, like my 6 months coming up, I probably should calculate all of my student loans. So I had private and federal student loans. I wrote them all down, and I was like, hold up, like, do this number say $1,187? Like, how am I gonna pay this? So that was like, so don't be like me, like no sooner.
It's cool though. You're almost done.
I'm almost done, thank God. But my life would be I would have so much more saved now, and I'd be like, I'm trying to buy a house, and like I would have more money to buy a house. Or who knows? Maybe I would have been taking more trips and not actually saving. Maybe, but still, I would have had more trips under my belt. I would have been more.
Whether it's a house or a trip, it's not paying loans. Doesn't really matter.
So yeah, I would say those. I know that was long-winded, but that's like what I would suggest to people who are currently in college, to have them in the best financial situation once they leave.
And what about business? Starting a business, LLC.
Yeah, I would say definitely get an LLC once you first start a business.
Okay. And when you do LLC, don't you have to put that? Because I know, like, I mean, I would guess that some people don't like get an LLC and don't put on their taxes because they feel like you get less taxes back when you have a business. Yeah, when you report your income and you put it on there and say how much you get.
I mean, you might, but it's like, what's legal and what's not legal. Yeah. You know, like, if you want to not report it, but then somehow the IRS finds out that you have the income, then you'll get penalties. They charge you interest too. Like if they can go back, I want to say like 3 years. Say they go back 3 years and say like, oh, like you was making money, why you didn't? We see all these transactions in your Cash App. Right. Where does money come from? You didn't report none of this income. Right. Then there's a possibility that you. But also think about it. The first year you start your business, a lot of times you're taking a loss. Yeah. So when you take a loss, you can report that loss too. That makes your taxable income smaller. So say you didn't make any money because you was buying a whole bunch of equipment. Yeah. And nobody sponsored your podcast yet. So you didn't make any money. You can still write off all of those losses. So that's why I say talk to somebody about it first, because every situation is different. Right. But I think that like an LLC is important. Yeah. Especially from like a liability standpoint.
So LLC, even if like for a podcast you're not making money or something where you're not making food or selling clothes, LLC still good?
I would, because what happens when somebody calls you up and they're like, Jordan, can you place my product right here while you're on it, and I'll pay you $500 an episode for it? You want to be ready. Yeah, because now you generate income. You don't want to be like, hold up, let me go find my LLC. Pennsylvania take a long time too. You're gonna be like, come on, PA, like, did I get approved? Did I stay ready so you don't have to get ready.
Yeah.
So if that's something that's in the trajectory for you, like podcasts make a lot of money.
Yeah,
they have the potential to make a lot of money. So it's a business, and you want to operate it as if it's a business.
Right.
Because if not, if you operate everything like it's a side hustle, then
that's what's gonna be.
That's what it's gonna be, and it's never gonna be anything more than that.
Okay. I think that's really it.
That's it.
You got anything else?
Yeah, I think we covered everything. I would say if I had to add one thing, when you're starting out on your journey towards becoming financially free, I call it financially sweet. I think one of the most important steps is to understand where you're starting from. Right. So what that means is listing out all of your income as well as all of your debt. So like just really getting a really good inventory of like for me it was eye-opening. I realized that like my net worth was negative. I was like, damn, I don't have that much money, but I got a lot of debt. And that changed the way that I started thinking about things. So after you do that, I would then set a goal. I think setting a goal is extremely important because for the longest time I was like, everybody keeps saying save money, but like why do I need to save money? What am I saving for? And it wasn't until I set a goal. The goal was for me to pay down my student loan debt. I started to actually want to save money. Because when I have the option of cooking or eating out,
you gonna cook.
Before I'm gonna eat out every time because I don't care about the money. But if it's like, all right, if I eat out, I want to spend more money, and that's less money I can put towards my goal. You're more likely to make more positive decisions when you have that goal in mind. Yeah, that's true. I think having a why is so important. Otherwise, what am I saving for? What's the point? So whether that be I need an emergency fund. I want to leave my job soon. Whether that be I want to buy a new car. I want to buy a house. Find something to save towards, because that's going to make saving a lot more easier, and it's going to make it enjoyable. And
it's not like I'm just putting my money aside for nothing.
Right? Be like, you know, so if I want that makeup, I'm gonna go buy that.
So if you saving for like a car, should you have multiple savings? Because once you get to the point with the car, it's like now your savings is gone. You know what I'm saying? So or should you have multiple?
So I would start my starting point for savings. I think, and what I actually did before I started tackling my debt was to build an emergency fund. Okay, cool. So for me, that was 3 months of my living expenses. So should anything happen, I could find a job in 3 months, right? And then from there, everything was extra. Okay. So it was like, all right, so then once I bought a car, like you said, once you buy a car, you don't have the savings. Well, you do, because you still have that emergency fund.
Okay. I always think that. I was like, dang.
I saved all this money and then now I'm back at zero.
Yeah, that's what I'm saying,
And that's why you save differently. Like, what you'll learn later is like there's short-term investments, there's short-term saving, there's long-term saving. Long-term savings is for like retirement, that house in 10 years that you want. Short-term savings are for things like cars, that vacation, that new camera that you want, this new equipment that you want. So you want to have a healthy mix of both. Okay. You want to be saving for retirement. You want to have money in regular savings accounts. You want to have money in investment accounts. You want to have, they say, diversification. You want your portfolio to be diverse.
Okay. That's good. You answer a lot of my personal questions, actually.
Oh, good.
Yeah, those are most of all my questions.
Oh, good. I'm happy.
Most college kids. What am I going to do after this?
Honestly,
yeah. What am I going to do?
Like
I got a job. How would I do with this money?
You got a job. It's that first paycheck is going to hit
with your bonuses in there too.
With your bonuses, it's going to hit. And what I'm going to say is have fun. Yeah. Have fun with that first check. Like, don't blow it completely
and be stupid.
But like
$0.
You've worked very, very, very hard. Like, don't be like, I can't touch this money at all. Like, go to the steakhouse with your friend. Get the $70 steak. Ooh. Right? Like, get the surf and turf. You know, it's fine. You deserve it. Because like we also are working. We also have to get this like idea out of our mind that like we can't have luxury and we don't deserve luxury things. No, you deserve it. But you also, while you're getting those luxury things, you also have to be thoughtful and mindful about the other things that are important in your life. So if you got student loan debt, like priorities are important. If you got student loan debt, that's never gonna go away. So pay that down, but also make time to have some fun too. So when you hit your first check after college, It's going to be nice. Be thoughtful about where it is that you live. Like, I had to have roommates moving to New York. With my salary, I couldn't live by myself unless I wanted to live further in New York.
And that's out the way.
But I wanted to live in a cool, fun part of the town. But that was what's important to me. But, like, my rent when I first started in New York, living in New York, was only $800.
Oh, that's not bad.
That's not bad at all for New York.
With roommates?
With roommates. That's 3 of us. We were in a 3-bedroom, 2-bath.
That's not bad.
My rent now has almost doubled. I pay like $15.50. I don't know, because my salary ain't doubled, so I don't know how I did that. Actually, my salary may have doubled since I
pay less in student loans too.
I do pay less in student loans. My salary may have doubled since then. So, but yeah, that doubled. So yeah, I would say, like, treat yourself, have fun, but come up with some type of plan as well. So that you can continue to treat yourself. You don't want to treat yourself and then you broke for the rest of the year eating oodles and noodles. But some people like that. It's some people who would prefer to eat peanut butter and jelly sandwich every day so that they can have the nicest things. But that's what's important to them. They want bags. So me, I like salmon.
Someone with peanut butter and jelly. What's the frozen peanut butter and jelly one?
Uncrustables. I just ate 3 yesterday. I'm so ashamed. Why? It's a box of 4.
And you might as well just ate the last one.
It got late, so I remember one day I called my boyfriend and I was like, "Would you still love me if I told you I ate an entire box of Uncrustables?" And he was like, "It depends. Did you toast them?" And I was like, 2 of them. The other 2 I just let cross.
I had Uncrustables 1 year.
No, they be my jam.
Literally.
I just make a peanut butter and jelly.
Yeah, but like when you live alone, a loaf of bread, it lasts a very long time. So like I don't buy bread that often because I don't eat enough sandwiches. So like it just go bad.
And living with roommates, the loaf of bread don't last long enough.
It don't look.
God, I just bought a loaf of bread yesterday. Did everybody eat a sandwich? Like,
for real?
Yeah. Peanut butter and jelly paninis 3 times a day.
Damn.
Like, girl,
so what's wrong with me having 3 Uncrustables?
I didn't say she was right.
Oh.
I don't agree with that either.
But I did count my calories and I still had a calorie deficit.
Okay. That's good. Alright, come on, because you gotta go.
Oh yeah, I do have to go. How we closing out?
Oh, I'm just about to close out.
Okay. Can you tell people where to find me?
Yeah, definitely tell people to find me. You can say it now.
Okay. Well, one, thank you for having me on here.
Of course.
I hope that the information was helpful. Of course. I'm working on being more concise, so I hope that I delivered this information in a concise way. Where you can find me on Instagram.
I'm gonna write it.
Miss.Money Honey. My website for all of like any of your finance and accounting needs. Well, really for your business. Tax preparation for next tax season. I'll open up in January of this year, but you can find all that information at moneyhoneyfinancial.com. And then that's really it.
Yeah, that's it.
Yeah, you can find everywhere else through there. You can find my email address. You'll find all of that through there. Yeah.
Okay, guys, thank you so much for tuning in to another episode of Daily Dose, and see you next time.